All right. Back in the action once again. Time to get back to work. It's about that time of day again, after all. Thursday evening, December the 12th, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because I help traders find high-quality setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. Tonight, my job is really important because tonight we'll talk about the best support and resistance levels for tomorrow. We'll talk about the best entry setups for tomorrow. And most importantly, we'll talk about how to anticipate and avoid all the big common rookie mistakes for tomorrow. That's Friday's trading session. And boy, do we have a lot to talk about tonight on this video. We'll grab the calendar, obviously, tonight. We'll check the schedule for tomorrow. We got some big news tomorrow, maybe some rollover, and dare I say, maybe a trade deal in the works tomorrow as well. We'll talk about that and what to expect for tomorrow on the news calendar. And obviously, we get a lot to cover tonight on these charts. I got some oil, some S&P, some Nasdaq, and of course, some gold. We're going to break all this down into small bite-sized pieces tonight. I'm going to start first, though, with the black gold, the Texas T, the crude oil futures. Boy, oh boy, that market just ran higher today and finished up the session going sideways in a range. Bull market, range scenario, makes the job pretty easy for tomorrow. Let's get it ready for tomorrow, though. That way you are ready to capitalize on the oil. If you love trading oil like I do, oil's setting up for a nice day here tomorrow. Most important thing we see right now on oil is a very easy to see bull trend going higher. And as you can see, call it a triangle, call it a rectangle, whatever you want to call it, it's a trading range. Range-bound markets are balanced markets, right? Think of a magnet right in the middle of that trading range. What goes down will come back up. What goes up will probably come back down. I look for buying opportunities underneath a trading range, looking for selling opportunities up above the trading range. And obviously, we're always keeping an eye on breakouts. There are some very specific breakout patterns that we look for breakouts going higher and breakouts going lower. So really at this point on the oil tonight, what I want to talk about is I want to talk about how this bullish bias and this trading range are all going to play in to buy low and sell high and focus on failures tomorrow morning. If you're an oil trader, you definitely want to stay tuned for more on the oil tonight. We're going to grab that oil and break that down into small bite-sized pieces. Over on the S&P. S&P is similar to oil. A lot more went on today on the S&P, which you probably saw firsthand. We went up, we went down, and it does look like the buyers have the edge on this right now. They seem to be holding above that prior all-time high at 31.58. And it honestly looks to me like this is very similar to what we just saw on oil, right? It's a move up, and it looks like a range up here. Now, anyways, what do we know about a range-bound market? Range-bound markets are balanced markets, right? Again, imagine there's a magnet right in the middle of that trading range. There's an overall bullish bias to it, which makes my job really easy to buy low on this. And then how about selling high, right? I do want to sell high because, it's a range, and so what goes up will usually come back down. How do I sell high on this? I do want to sell high, but around the all-time highs, I'm going to have to really put together a good plan so I don't get chopped up trying to sell high over there. So buying the low is going to be easy. Selling the high is going to be a little more tricky. We'll talk about that in a lot more detail tonight, obviously. And then what about a breakout? Because there's a big old measured move up there. I know it seems a bit ridiculous for now, but hey, with all we heard about the news and the trade deals today, this could easily happen again tomorrow. I want to talk about some breakout patterns tonight. We'll look for if this market goes higher as well. So bull market into a trading range. We're going to make sure we break this down into small bite-sized pieces. We'll go over all the entry setups, entries and exits on the S&P tonight on the video, so make sure you stay tuned for more on that. Nasdaq. Now, normally the Nasdaq is very similar, and it is, but I think the Nasdaq, if you put your nose in the air, you stand on one foot, you can kind of, it smells, I'm getting a whiff of a range on here. A lot of times these markets, they make these big runs like this, and they run up, they run down, they run up, and they kind of end right in this kind of And a lot of times, it's not until the end of the day that you can kind of get your arms around that trading range. Yes, we are bullish right now on the Nasdaq, but no way do I want to be a buyer up here. I think there's a range right here. I think by the, obviously depending on what happens overnight here, but it looks like we have a range on this chart right now. There's definitely a bullish tone to this range. So range bound markets are balanced markets. I want to buy underneath the low of that range. And again, I want to sell above the high. I can be a lot more aggressive, by the way. Remember, this is a bull market right now with that bullish bias. I can be a lot more aggressive being a buyer underneath that range than I can be being a seller, right? I need to use a couple specific entry setups to sell off of that high. And as you can see, we don't have a lot of open space up here like we do on the S&P. So it'll be a very different plan for the Nasdaq than it will be on the S&P for tomorrow. So we are looking to buy low, sell high, fade the breakouts, focus on failures. We're going to talk about all those details tonight on this video. And then, of course, last but not least is the gold, the mighty yellow metal. Gold is pretty much the opposite of what oil is right now, which is quite common. Oil up, Eminis up, gold down. That's pretty common, right? Kind of fundamental correlation there. What do we know? We know it's bearish, very bearish market as it's going down. We also know it's a range. Now, there might be a couple variations of this range, but I think the range that most people will see here is going to be that one I've got drawn in. Now, again, think about it. It's a bear market into a range down here. What is the range? The range is the magnet, right? So what goes up will usually come down. What goes down will usually come back up. And again, because I have that bearish bias to it, I really want to try to find my way in selling above that trading range. And as you can see, I get a bunch of levels here, just stacking them right on top of each other that I really like up here to be a seller. So we'll definitely talk about how to get short off that. I'm not just going to sell at resistance. I will look for a couple patterns, and we'll talk about that in detail tonight. But is it just me, or anytime I see a move like that, right, just straight down like that, this could easily whoop right back up again, right? What goes down that easily could easily come right back up. And so what would a short covering rally look like? That's something I want to talk about tonight on the video as well, right? How would you qualify the short covering rally? What would you look for, right, for that reversal going higher? And there's also a couple really big important clues here as we go lower too. Got a couple big levels of support down here that if we do end up going lower, I want to make sure you're aware of as well. So gold is all prepped up here for us tonight. I got some Nasdaq, right? We got some S&P. Obviously, oil is all locked and loaded there as well. Before we jump into the video tonight, though, I just want to make sure to remind you to join our mailing list, right? You may not be aware of this, but I send out an email right before we publish this video on our YouTube channel. I know I'm running a little bit late here tonight, so I do apologize for being a bit late here on the video tonight. It's been a busy week here. But make sure you join our mailing list. That way you never miss another great video. Joining is very, very easy. If you're on YouTube right now, I'll put all the links in the description of the YouTube video. And all I need is your name, your email address. Hit that subscribe now button. And don't forget, when you subscribe to join our mailing list, I'm going to send you a welcome email. And a lot of times that welcome email gets stuck in your spam folder. So check your spam. If you don't see the welcome email, make sure you find that welcome email, though, because it's a verification link in there for you and a bunch of great free resources so you and I can get the most out of working together every evening on this video newsletter. And then don't forget, guys, if you have any questions for me tonight, drop those questions in the comment section below. Any questions you have about anything we talk about in this video tonight, I'm always hanging out answering all the questions. So if you have any questions, drop those questions in the comment section below. And while you're down there, right, typing those questions in, do me a big favor, will you? Hit that thumbs up button for me tonight. Every time you guys hit those thumbs up buttons here on YouTube, it really helps to expose this video to other traders who would love to learn this trading strategy. So type those questions in. Always look forward to answering all your questions. Hit that thumbs up button to help me support this YouTube channel. Oh, and don't forget, if you need me for anything at all, don't be afraid to call that toll-free phone number. I'm always here to answer the call answer all your questions. Maybe you have questions about the trading strategy, or maybe you want to learn more about our free trading classes or a free pass to our trade room. But definitely call that toll-free phone number, use that live support tool in the upper right-hand corner, and I'm always standing by to answer the call and answer all your questions. So make sure you join the mailing list, right? Give me a call if you guys have any questions, and use that comment section below. In the meantime, let's grab a look at the calendar here for tomorrow. Tomorrow, of course, is Friday is that Friday the 13th? Well, okay. So apparently tomorrow we're avoiding black cats, avoiding all broken mirrors, stay away from those ladders apparently, right? Though there's still the salt over your whatever shoulder it is. I'm not much of a superstitious guy myself, but right, if you are, right, you're on notice for tomorrow. Make sure you bubble wrap yourself, right, if you are. All kidding aside, though, I don't expect Friday the 13th to have too much of an impact on the financial markets. What I do expect to have an impact on the financial markets. I mean, where do we start? We know trade is a big issue right now. I mean, President Trump here in the U.S. Took to Twitter, right? Something new, right? Took to Twitter this morning talking about a potential big phase one deal. We're kind of waiting on the kind of finalization of that trade deal with China. That is a big known unknown. We're all kind of waiting in the wings right now. Also, we've got the UK election. We've got election numbers kind of trickling in. Now, this may not affect us too badly tomorrow, but this is something overnight that may shake things up, right? Especially if there are any surprises in the results of that UK election. What else do we have here for tomorrow? Rollover. Rollover is going to be a big part of tomorrow. The S&P and the Nasdaq. We are anticipating rollover. We talked about this yesterday, right? We should be looking at rollover on the Eminis, right, and the Nasdaq, right, S&P and the Nasdaq. So keep your eyes on volume on the 320 contract, right? It's the 0320 contract. That is the March 2020 contract is the next contract month we're watching on these E-minis. So these are kind of the things affecting us tomorrow, trade being the big one. The UK election, probably not going to be too big of a deal tomorrow during the day for the U.S. session, but if you are trading in Asia, right, or if you're in London, I would imagine that will probably impact us tomorrow. And then, of course, if you're an E-mini trader like we are in our trade room, that rollover, right, contract rollover, you want making that move most likely to the 0320 contract, right, for tomorrow morning's trading session. What else do we have here for tomorrow? We get some retail sales, right? Some of the biggest news we're going to get this week is tomorrow morning at 8:30 Eastern time. So retail sales is a big market moving event tomorrow. Anytime I think retail sales, I think all the big tech companies, right? With all their gadgets and gizmos, that means Nasdaq. So Nasdaq tomorrow around that 8:30 announcement. I also think about retail sales. Again, you know, what else do they use in those gadgets? They use metals. So gold, silver, platinum, right? Think about metals tomorrow around 8:30 Eastern time. All those electronic gadgets, they need all those precious metals. So that will also be a market to keep an eye on for tomorrow as well. So Nasdaq for sure. And maybe some trickle down volatility, right, in the metals markets. And of course, we'll grab a look at gold for tonight's newsletter as well. So retail sales, big one for tomorrow. Known unknowns. Trade, UK election, and rollover, right? And as always, tomorrow is a Friday. There will be a sense of urgency tomorrow morning. Early in, early out on a Friday morning trading session. We got news bright and early. You've really got to have a good reason to be trading on a Friday afternoon. Okay, I always recommend after 11 o'clock Eastern time, take the pulse of the market. If you don't know what a good market looks like, make sure you come out and join us in our trade room, and I'll show you what a good personality looks like compared to a bad personality. We want to stay away from the real grindy personalities, the low volume, low personality markets that start creeping in after 10:45, 11 o'clock, 11:15 tomorrow. So again, we know about the news tomorrow. Early in, early out. Rollover, the election in the UK and trade are all on our radar for tomorrow. As I mentioned in previous videos this week, tonight is my last newsletter of the year. I won't get all sappy on you, but I'll tell you, it's been a great run this year. 2019's been a year to remember. I'm really excited for 2020. I've got some great stuff coming for the newsletter next year. My next newsletter, again, tonight is the final newsletter of the year 2019. The next newsletter will be that first full week of January the 6th, I believe it is. That is a Monday evening. I'll be off on break from the newsletter, getting my office in order, getting all the trade records in order, right? Just regrouping from this year. And as always, we'll be in our trade room Monday through Friday, 8 o'clock Eastern time, doing this together. Don't do it alone, right? Come out and join me tomorrow as a new client in the trade room, and we'll do it together. Retail sales getting the party started tomorrow. I'm very curious to see how this UK election will affect us overnight as well. All right, let's jump into some charts here right now. We get some oil, some S&P, some Nasdaq, some gold. I'm going to jump in first here to the oil market. Again, oil is a bullish market into a trading range. I want to buy underneath that range. I want to sell up above that range. And to do that, I like to use what I call a failure setup. The key is when you find yourself inside of a range, I'm going to use the size of that range to find my buy zones below, find my sell zones above. Now, not to worry, I'll teach you more about this in our trading classes here at School of Trade. But once you find the range, and the range is really important because once you know where that range is, then you know where your sell zones are above and you know where your buy zones are below. I want to buy in the buy zones. I want to sell in those sell zones. Now, what are the best patterns to do that? Well, because we are bullish, the easiest way for me to be a buyer in the buy zone as we go lower is to wait for sellers, counter trend, breakout sellers, to try to sell a pullback off the moving average. I know exactly where their stops are at that point, and I'm going to look to buy, literally buy right into those stop losses. Now, most of the time, what will happen is it'll trigger the stop losses running higher. Then it will pull back to the moving average. So I like to look for what I call a combination setup. It's a failure pattern into a pullback pattern off of that low. It's literally a seller breakout pullback failure into a bullish pullback off of that low. That's what I'm looking for tomorrow around those lows. As we go higher here now, I want to be a seller back into that range, but how do we sell in a bull market, right? We have to use a reversal pattern. My favorite reversal pattern is called a crown reversal pattern. So as we go higher, I'm looking for, again, I want to get up inside that sell zone area. Once we go higher now, what I'm going to do is I'm going to let the buyers try twice to buy the pullback. Remember, we're bullish right now. And a lot of times when a market goes up, right, it'll pull back once, twice, and then go through from there. So I don't want to just try to sell it when they fail the first time. Let them try once, let them try twice. And what I like to look for is, because this goes against the trend, I like to look for, at the minimum, a double top. The best would be a trap right above that first try high. So imagine now the pullback, the buyers try once, the buyers try twice. We get that little trap right above that prior high. I call that a crown reversal pattern. Okay, so those are three patterns I'm watching for here to buy low and sell high. But I know what you're thinking right now. What does a breakout look like? Breakouts going with the trend and going against the trend. First of all, what's a breakout look like on the downside? A bear breakout, this would be a reversal breakout, requires a 1, 2, 3 breakout. What I want is a strong move down, a pull back to the moving average, right? Strong move down, pull back to the moving average, strong move off the moving average. If I can get that 1, 2, 3, that confirms the breakout and the reversal. Now momentum is firmly now in the hands of the bears. We know where they're trying to go, down around that 58.11. I'm going to mark up 3 things. 1, mark the original low. 2, draw a trend line off these lows. 3, draw a hidden channel now off those highs. I draw the channel first off those new lower lows, And what I'd like to do is find that level of resistance up there and pop that trend line up top. That way it kind of creates a little hidden level up there, and that's where I like to sell. And again, I call this a 1, 2, 3 reversal. In this case, it'd be a 1, 2, 3 breakout into a hidden channel pullback. Again, targets down at that 58.11. Now, the sell side on this is the easy side, because trying to be a buyer as we go higher, we've got some concerns up here. If you look left on this, you can easily see there's a major top up there right above, just below $60 a barrel. And then above that is the big round number. So as we go higher here, again, I'm still looking for that crown reversal like I mentioned. Okay, but if I can get a 1, 2, 3 to run, now I feel like I'm confident we've broken through this overhead resistance. I can mark up that high, and again, find that hidden channel off those lows, and then try to buy the low of that, of that hidden channel. Again, it's a 1, 2, 3 breakout into a hidden channel pullback. Now, sometimes, and again, this will be with the trend, okay, because we're going with the trend, I can also use a little bit more aggressive entry pattern. For example, let's say, we see a strong run up, and that strong run up pulls back once, pulls back twice, trap low. I call this a 2-try breakout pattern. Now, kind of watch how I draw this, though, real quick, right? These are higher highs, okay? Very important to get those higher highs. What I want is a strong run up first, okay? That creates that fear of missing out. It puts momentum on our side. But the problem is we're at major resistance up here. So I have to give the sellers the benefit of the doubt and let them try a couple times. The first pullback is usually just buyers taking profit. The second pullback is the one I'm hoping that sellers, right? That second attempt to go lower, those are bears getting in and trying to sell it. I want to be a buyer right into those stop losses at that point. So those are 2 breakouts I'm watching right as we go higher. So now we've got the plan all put together here, nice and tidy, right? Bull market into a range, buy low, sell high, keep your eyes out for the breakouts, but don't try to predict the breakouts. Which reminds me, have you taken that free trading class yet? Because I'll tell you right now, I go over a lot of these, well, all these patterns, and honestly, right, all these patterns are covered inside the free course. I'm going to put a link in the upper right-hand corner for you. If you're on YouTube, right, or really watching this video right now, hit that link in the upper right-hand corner. Grab that free trading course. I'll also put a big red button for you right below the video tonight on our trading blog. But most importantly, though, grab that free trading course because I want you to learn more about all of these patterns. Most importantly, when I say failure pattern or pullback pattern or crown reversal pattern, I want you to know what that pattern is, what to look out for, and I cover the majority of those details in that free trading course. So make sure you pause the video if you need to, grab that free course, right? You'll love the free course because the free course will teach you more details of everything we talk about tonight on this video newsletter. In the meantime, though, let's keep going here. Over on the Eminis right now. As you can see, the Eminis here gapping up here at the open. We recently heard from the U.S. President Trump talking about a trade deal getting signed tomorrow. So what do we know about the market right now? We know the S&P, again, we are watching rollover. This is a 1219 contract right now. At this moment, it does look like that 1219, right? If I look at rollover for tomorrow, it does look like, just the S&P comparison, it does look like we are still trading on that 1219 contract. There's twice as much volume on the 1219 contract. Now, that may not be the same by 7:30 Eastern time tomorrow when the U.S. morning session wakes up and comes to life, right? So we may see once that volume is greater on the 320, we're trading the 320 tomorrow. Same thing for the Nasdaq, right? Nasdaq still looks like, yeah, you still got that, a lot more volume on the 1219. So even though we are watching rollover, and I would be surprised if we don't see rollover tomorrow. If not tomorrow, it'll be next Monday for sure, right? But when I come back to my desk tomorrow after a good night's sleep, I'll check that volume. And of course, if the volume is higher on the 320 contract, right, the March 2020 contract, we'll then make the move over there, right, to sell it. All right, what do we know about this market right now? right? We know the market had a big bull run higher, right? In a bull market, anytime we see a strong move like this, we always expect to see buyers trying to retest the high. And it looks like it just did. Okay, think of that as the major objective. So the buyers, mission accomplished, right? They crossed the goal line, touchdown, whatever exclamation you want to use for, right? Big strong move up. Anytime we see a strong move in one direction, we expect to see at the very least a retest, at the very most a measured move. So where are we right now? We're right at that retest area right now. What does that really tell me? It tells me we're bullish, but we're at a horrible place to be buying right now. Absolutely a horrible spot to be buying. If I buy right now, I'm buying where a majority of the more professional buyers are going to be taking their profit. Okay, simple as that. So I don't want to buy up here right now. Okay, that's kind of the lay of the land right now. We're bullish, but we're sitting right on top of these highs. Horrible place to be a buyer. Don't forget about that trading range, right? Up until this gap up, this market looked pretty easy, right? Bull market into a range. Now, we just talked about this on the oil, didn't we? What do we do with the market that's bullish into a range? We look for those seller failure into pullback combinations off the lows, right? Or we look for what? Crown reversals, crown reversals off the high. Okay, same pattern, just a slightly different look to it. You know what I mean? And you'll see that. I'm going to use the same patterns, the same strategy over and over again, just in a little bit different way, because every chart is kind of a puzzle that you got to fit it all together. Okay, so put these two things together right now. Okay, what does the range tell me to do? The range tells me to sell up here with that crown reversal. What does the range tell me to do? Range tells me that when we get down here, I want to buy with a failure into a pullback. Okay, those are the two main categories right now. We also know we're right up around the high of that range. Horrible place to be a buyer. I think it's a good idea to keep your eyes out for those buyers try it once, buyers try it twice, and sell the sucker back down into that range. Okay, I know it's a bit scary because we're so bullish right now, but that's why you wait for the right pattern. I'm not saying just short this thing, right? That would be crazy. It'd be foolish. It'd be dangerous. It would be unreliable, right? So I'm not trying to sell it yet, but if I can see the buyers try once, try twice, I will gladly look for. In fact, you could say it's my job to take that trade short. You know, it's like a pro baseball player getting paid to swing at strikes. Okay, your job is to swing at strikes. If you get that pattern off the high, your job is to execute that plan. Now, my big question though is, now we've got this big swing up. What if we do get that crown reversal up here and this thing tanks? See, now this opens up another kind of can of worms here. You know, for example, I want to buy down here. I know that already. Okay, I want to sell as we go. I want to sell off that high. But here's a couple things to consider. If this market just took off and ran lower, straight down, would I really want to buy it up again? I mean, isn't that a lot of momentum? It is a lot of momentum. So if this market just tanks and runs lower, right? Kind of like what happened back here, right? Look what happened back here. Look. Go back in time. We had that big move down. Is that big move down? Right? That big move down, what happened? The bears came in, they tried once, they tried twice. Look at that. What is that called? That's one of those crown reversals. You see it? Now, I don't think we actually need the crown reversal, but I do think though, when if price was to just sharply pull all the way back, you definitely want to look for a failure, right? Because again, you're underneath the range, you want to buy it, but you got to respect those bears. Okay, they're not going to give up very easily. Make them try once, make them try twice, and then be a buyer. Okay? And again, if you can get a trap low, if you get the crown reversal, then absolutely, right? That's a cherry on top. Okay, so if we can get that crown reversal, then bingo, right back up into that range again. That looks great. Now, keep in mind, these types of patterns, because they fool the sellers, they oftentimes snap right back higher. So if you get one of those big strong moves down, right, then look for what we call a two-try trap pattern. Two-try trap pattern. Now, I talk a lot about trap patterns in that free course I mentioned earlier, so make sure you grab that. But these are two I'm watching for here tomorrow. And again, I want to remind you, if the market really dumps, right? If it really collapses off that high, I want to buy down here, but I'm not going to buy it just blindly, right? Because the momentum will be too strong to the downside. I'm going to wait for the bears to try once, try twice, then I'll buy in their stops, right? At that point, the stops are easy targets at that point. And then again, as we go higher here, stay away from the range, little trap low, get the moving average coming over, right? Beautiful, beautiful. That's what I want to see at these lows. Now, another thing to consider would be obviously if we come back into that range and we just chill out for a bit, which is very possible. If that's the case now that absorbs a lot of this momentum. And if it absorbs that momentum, now if we go sideways here overnight, you know what I mean? If we go sideways here, now I can pretty much use that same failure into pullback combination underneath that range, right? Wait for the market to go lower. Look for those sellers to try to sell the pullback to the moving average. You're buying right into their stops. You hopefully get that pullback before it goes back up into that trading range. So some food for thought, right, as we go higher or as we pull back. Now, what about breakouts here? Okay, about breakouts. Now, first thing about breakouts is before you take any breakouts, you got to make sure you can answer where we're trying to go, right? You should not be taking breakouts until you know where are we trying to go. Because remember, what is a range market? A range, what is a range? A range is balanced. Okay, I keep saying this because it's really important. Ranges are balanced. Okay, what is a trend? A trend is what? On a mission. If you've taken my free course, you know this type of stuff, right? It's very important to understand when you're in a range, you're balanced. That's why you buy low and sell high. When you break out of that range, you could say the market goes out of balance, if you will, right? Bottom line, though, is when a market breaks out, it's trying to get somewhere. So before you take any breakout patterns, right, where are we trying to go? That's the big question, because that will determine what type of entry pattern I use. And you can see right away, strong move up. As we go higher, it looks like that measured move is probably where they're trying to go. So that means now, if I get a 1, 2, 3 breakout, oh boy, that's going to be tough. Okay, that'll be right up into that measured move. So therefore, my preferred breakout pattern would be that 2 try breakout, right? Strong move up, 1 try for the bears, 2 try for the bears, trap low, and go from there. The trap is really the most important part of this because you don't want to buy into that resistance. And my favorite entry setup to avoid buying into resistance or selling into support is always a trap pattern, right? Bears try once, bears try twice. We're buying that trap low. Okay, how about the breakout to the downside? The breakout to the downside is relatively easy. Okay, I think the hardest thing we have to worry about is this 31.58 area. 31.58 is the old all-time high, right? So if you're to go back in time, right, that's that prior all-time high, right, from right at the beginning of the month. So I think the one thing we got to worry about is if we do get that 1, 2, 3, we may just go right back around this little range down here. You know what I mean? We may end up getting stuck down there after reversal. So if you want my opinion on this one, I would want to see us get through that and go, right? I want to see us get down however we get there, whether it be a reversal or a collapse or whatever, right? But I want to see us get down into that area, hold a pullback, and run from there. If I can get the market, give me a nice big push off that again, that prior all-time high at 58s, I have no problem being a seller now. I know where they want to go. They want to go back down to retest these lows. And again, what I'll do is I'll mark up that original low, that first low, find that channel. Again, I always like to go looking for a high up here to combine as key resistance or as hidden resistance and then sell the high of that hidden channel. That's my goal. That's my goal after we see this thing reverse. And again, you'll notice I'm not trying to sell that first pullback, right? Because we oftentimes see strong moves in bull markets and the pullback tries once, tries twice, and fails. I mean, look left. It happened right here. Strong move down once, twice, and failed. right? And that's all because the market was so bullish. If they would have come down and held that and run, this would be a whole different story, right? The headlines, the newspaper wouldn't be reading all-time highs. It'd be reading rejected off all-time highs. So that's definitely some buy and sell setups I'm watching for here right now on the S&P 500. Again, right, if you haven't taken it yet, grab that free trading course. It's linked up in the YouTube video here. I'll also put a big red button for you on the trading blog at Sideways Markets, and of course all the links in the description of the YouTube video. Same thing here on the Nasdaq. Now, as I mentioned in the introduction, if you kind of put your nose in the air a little bit and sniff around a little bit here, you can kind of it smells like a range. It does smell like a range. And the big giveaway is how deep this pullback was. That's kind of the giveaway. When you get a market that pulls back about 80% of that original move up, usually what's going to happen is, right, they're going to try to retest the high. I'm pretty impressed by these buyers, but I mean, it's all this trade deal right now. So, what typically happens is going to be a little bit out the window in the next couple hours as the UK elections come in, as we hear more about Brexit. I mean, they haven't even responded yet in China yet. So a lot of this could be, right, more to come tomorrow because we just simply don't know all the details yet. But again, when I see a market go straight up like this and kind of go all the way back down, a lot of times what will happen is it'll go up, try to retest the high, pull back, and then that's going to give you that range. So that's kind of what I'm thinking right now. I'm thinking this market's probably going to end somewhere, right, in a trading range. And who knows? Again, we've got a lot of known unknowns right now regarding what we already talked about here. So again, I'm anticipating a range here. It's a little bit foggy right now. You'll notice it's not that obvious yet, but I think the big giveaway is the depth of that pullback. The fact that they couldn't take that and hold it and keep going, it just tells me we're going to probably end up here back inside those range unless anything really rallies it or spooks us, right? I mean, we could hear it from China here in a couple hours, and they could say, this guy's crazy. We're not signing any trade deal, right? And we're going to see this thing dump, I would imagine. So, again, we're watching rollover here. This is a 12.19 contract, so be aware of that. Same basic idea here on the Nasdaq, right? What is interesting about the Nasdaq, though, is this level right there, 84, what is that, 58 or so? That's the prior all-time high. And you can see how that really takes kind of center stage there, right? This whole 84, 58 area, that is the prior all-time high. So I would imagine that area is the magnet. What goes up, back down. What goes down, back up. Because we're so bullish, the only way, and again, I got my trading range. I take my trading range. I use that to find my buy zones. I use that to find my sell zones, right? We talked about that earlier. We're up inside that sell zone right now. I want to be a seller, but who in their right mind would sell this market blindly right now? Well, I would sell it if I was taking profit, right? If you're already in a long position, this would be a great place to take your profit. But as we go higher here, though, I've got to respect the buyers. The last place I want to buy is here, though. I don't want to buy here. So what I'll do is I'll let the buyers try once. I'll let them try twice. And again, minimum criteria, double top, ideal, trap high. What we call it again? A crown reversal pattern, right? A crown reversal pattern. Okay, one of my favorite reversal patterns, a crown reversal. Okay, it does take a little bit of waiting for this pattern, but it's worth it, right? It's worth it. When you're trying to reverse the trend, give the trend followers the benefit of the doubt. Again, if we run back into the range, I think the biggest variable right now will be, whether or not we get a crown reversal or if it collapses back in. But if we go back into that range and go sideways, now that kind of makes momentum, it kind of dries up momentum. So if we sit here for a while inside of that range, now we look for the move below the range, let the moving average come over. Sellers will try to sell the pullback off the EMA. We look to buy into their failure. If we get lucky, right, we get that combination, that failure into pullback combination, and then back up into that trading range. Or do we just collapse? And if we collapse, just like we saw back here, right, they try once, they try twice, and look what happens after that second try, right? It just blasts higher. That's exactly what I'm anticipating. Again, if we don't even blink inside that range, right? We pull back, moving average comes over, bears try once, bears try twice, and up from there. And again, I want to remind you that a lot of times what happens on these is you get these, I call these nested failure patterns. We get these 1, we get these 2, and then what happens is you get this. You get this big blast, okay? And that's because all the sellers are getting stopped out, and they're being forced to buy their way out. So it blasts higher. What you want at that point is you don't want to chase after it, right? You want to be in off the failure, but more importantly now, you're trying to get a pullback. It's probably not going to pull all the way back. It might, right? It oftentimes does, but if it doesn't, watch out for that little trap, because that little trap pattern, and again, you'll learn a lot more about the traps here in the free course I mentioned earlier. That little trap pattern will be great to keep you out of the range. Remember, what does a range tell you? Buy low, sell high, avoid the middle. Ranges are balanced. We don't want to trade inside the range. We want to let the market go lower and bring it back into the range. Once it gets back into the range, though, stay away. It gets a little choppy inside that range. All right, now, how about a breakout? Breakout going higher, not going to be as easy as we'd like, right? Before we take a breakout, we've really got to think about where we're trying to go here. What I would imagine, again, this is a big deal because it's not much space up there. Now, you can try to get aggressive on this and go for a 2-try breakout pattern, but I mean, you're going to be doing that right at those highs. You know, so remember, we don't just trade patterns. If you just trade patterns, you'll make money on some patterns, you'll lose money on the others, and at the end of each week, your commissions will bleed you dry. Does that make sense? If you just trade patterns, you will kind of die a death of 1,000 cuts, so to speak, right? Your broker will love you because you're taking lots of trades. It'll feel like you're doing something. But, you know, again, you won't see the consistent results you need. And at the end of the day, end of the week, end of the month, your commissions will bleed you dry. That's why I say you'll die a death of 1,000 cuts, right? So don't just trade patterns. Think about, is this pattern in the right location? You know, location is not just for real estate, right? It's location, but also, too, it's location and momentum, right? So we know momentum's on our side. We know the bulls have momentum on their side. So I can be a buyer, but it's just a bad location. This is not a place where we anticipate more buyers are getting in. We anticipate buyers are getting out up there. What I'm going to do tomorrow on the Nasdaq is if we make a run higher, I'm going to look for a range up here. And then once we see that range up here, now we know, right? Just wait to go underneath it. Wait to get that seller failure into pullback combination and buy up underneath it from there. Now remember, that range has to take flight. It has to show up first. Okay, what you really want is you want this market to go up and stick up here for a while. You know, a good couple hours, right? Going sideways up there. The longer we sit kind of pinned up to those highs, the more likely it is that we pull back. The bears come in, try to sell a reversal back in like they got back here. Sometimes those reversals do work. Okay, so you can't just blindly buy it. You want to buy it after they fail, right? After they fail. Or as we go higher, if they immediately pull back 1, 2, right? Trap high, crown reversal, look out below. Pull the cord and send the sucker back down into that trading range. Now, if things really get good, 1, 2, 3, big breakout to the highs, okay. I'm willing to be convinced, but I will not be convinced of a 1, 2, 3 breakout until I get 1, 2, 3, and this thing shows me proof that it has the cojones to go through that measured move, which, by the way, could easily happen, especially with a combination of rollover, trade, and retail sales tomorrow. Right? It doesn't seem likely, but this move up today didn't seem likely either, right? And we see how, right, the power of tweets, right, can really send these markets crazy right now. Find that new channel, and we're buying the low of that channel. It'd be a good rule of thumb, though, to make sure the moving average gets above that measure. You know what I mean? It'd be a good rule of thumb to make sure you're not buying underneath that measured move, right? And that will require you to get a strong enough move as it goes higher. All right, I like that. right? I like that. Make sure you get through that measured move, get the moving average, right? You know what I mean? Because if I see a strong move up and a pull back and go, and the moving average is here, that's going to be a tough pill to swallow, right? That'll be a tough pill to swallow. But if I can get it up and go 1, 2, 3, moving average comes all the way up. Okay, now if I can do it then, I'm a lot, you know what I mean? I'm a lot more inclined to want to buy that if I can see my levels are holding above where I think the objective was in the first place. And then again, don't forget reversals. Right, as we go lower, back into the range. You want to go back into the range first. 1, 2, 3, break down. Mark that low, mark that high, and we're selling off the high. As you can see, I'm not trying to sell as the market goes lower. Why? Because that's where professional buyers are going to be waiting. That's also where professional sellers and their reversals are taking their profit. So think about it. If you try to sell as this thing goes lower, if you're trying to sell down here, I get it, right? It's a strong move down, but you're selling where the professional sellers who shorted the high, they're getting out. They're buyers now, okay? You are literally filling their profit targets. Think of it that way. If you chase the move lower, you are the person taking the other side of that trade of all professionals, right? Professionals are the ones who know the reversals, right? They're selling the reversals. You're then trying to sell down here. You are literally saying, oh, you want to get out? Let me get in, please, right? No, that's not a good idea. So that's not a great spot to be selling. But if they can hold that pullback and run, okay, now I'll shut up about it, right? And we'll sell it now. But now find that new channel, right? And sell the top of that hidden channel. All right, great stuff here on the Nasdaq. Last but not least here, wrapping things up here with the gold futures. Oh, good. Showing us off this, right, this little triangle here now. Again, we're getting some movement here in the overnight as we come out of the UK election, trade talks, right, et cetera, et cetera. What do we know about the gold right now? By the way, gold already had its rollover, so gold's clear to go, right? Again, tomorrow though, 8:30 news, retail sales, big deal, big deal. Strong move down into a range. Now, we're going to take the same basic strategy, but flip it around, right? Same basic strategy, but flip it around. We know we're bearish into a range. What is a range? A magnet. What goes down comes up. What goes up goes back down, right? What I want to get up above the range inside the sell zones, right? Sell inside the sell zones. Now, this is a great example of how you can stack levels of resistance on top of themselves. One of my favorite tricks in a range is to find those expanding triangles. You'll notice how I've drawn the trend lines across right now. Since we're bearish, though, I always like to look for those resistance trend lines, right? Those kind of like rising resistance. Now, look where that lines up, right at that prior level, the prior low of day. Not the prior low of day, but the earlier low from today. Okay, that's a great level. You can see they hit it there as well. And then also, too, I've got these lows marked up to those highs. This is kind of what I call a hidden channel, right? That level is also right there as well. So I really like that spot. In fact, you could go one step further and say we now have potential for a pendulum swing. So the amount of the move underneath the trading range can now be swung back on the other side of the range, right? And now that kind of gives me another area to keep an eye on, right? And by the way, if they go lower and come back in, that becomes a bigger pendulum swing. Make sense? Okay, we'll keep an eye on that here as we go through the rest of the overnight session. What I want to do now is stay out of the middle, stay out of the range. I want to get up, right? Up inside my sell zone. Ideally, I want these buyers to come in, try to buy that pullback. And you know what my plan is. I'm going to wait for those buyers to wrap that rope right around their neck. It's not a bull market. It's not even a trending market. It's a range market, a balanced market with a bear bias to it. The bulls are not in control. The odds of success going higher are probably less than 40% at this point at that location. And therefore, I'm looking for a failure. I don't want to be a buyer in a bear market, let alone the top of that range. We look for that failure pattern, and then if we get lucky, we get that combination with that sell, right? Failure into pullback and back down we go. Now remember, that could be a reversal. What would a reversal look like? Strong move up, pull back to the moving average, jump off the moving average. You got it, right? Mark up those highs, mark up that low, mark up that first high there. There's your hidden channel. And we're looking to buy the low of that hidden channel. Okay, where's my target? I would assume my most important target there is 87.5. That was the prior high right there. That would be a pretty good spot, a conservative location, right, to place your final targets. One more thing I want to point out going higher is the potential for a short covering rally. Anytime I see this much just strength in one direction, any market that can go straight down like that can go straight back up easily too. Right? Any market that can go straight up can go straight down. If it can go straight down, it can go straight back up. So the moral of the story is we may not get a 1, 2, 3 reversal. What we might get is one of these, right? Where it just takes off. And if it takes off like this, strong move up, 1 try for the bears, higher high, 2 try for the bears. I'd like to get a trap low on this. That would be the ideal, right? But it's probably not going to be required. As we go higher, what you want, though, is, again, it all starts with that strong move up, right? That strong move up creates the fear of missing out. It gets the FOMO juices flowing. Once the buyers take profit once, the sellers will come in and try to sell it on the second time, and we'll look for those sellers. Once we see those sellers commit to that second position, now we know right where their stops are. Right? Now we know right where their pain points are, and that's exactly what that pattern does. That pattern gets those sellers roped in and literally wherever their pain point is, right, stomps on it. That's exactly what that pattern does, right? Like rubbing salt in a wound, it causes sellers, right, to react. And how do you get out of a short position? You're a buyer. Right? That pattern we're looking for as we go, right, as we go higher. Now, how do we buy off this low? Buying off the low is a little difficult, is it? Because we're bearish. So how do you buy off the low? You buy off the low with that crown reversal. Again, remember, these types of patterns, they tend to happen a lot longer than you think they will. Okay? Don't expect this pattern to trigger in 5 minutes. It'll usually take about 15, 20 minutes. It takes some time for these markets to turn directions, most of the time, right? Sometimes it doesn't. If it doesn't and it snaps back higher, right? If we run down, then snap back higher here. Now what? Now momentum's a big concern, isn't it? But we're overall bearish. Can I sell this? I can. But remember, we talked about this earlier, that momentum now is too strong. So make them try once, try twice, and then back down. You won't need the crown reversal because you're already on the side of the bears, right? It's just that momentum you got to worry about as we go higher. Again, it's 1 part location, 1 part momentum, and that will tell you which pattern works best in that environment. All right, guys? And now breakouts, right? We talked about the breakout going higher. How about the breakout going lower? Here's the problem with gold right now. Gold is sitting on some really nasty support levels. Big time support down here at 64. You know, and normally I would say, okay, break through that area, but look, right below that is 53. So it's going to be tricky down here. It really is. If they break this thing down, obviously a 1, and again, because we're bearish, I don't need as much of movement, but 1, 2, 3. I mean, if we get lucky and we get the pattern early enough, I can find that channel and I can sell that channel, right, the high of that channel down to that 53.1. But just like the Nasdaq though, right, if this thing just tanks, I can't do anything down here. I've got to wait for a range, wait for the profit-taking rally, wait for buyers to try to buy the failure and go back up and literally sell into their failure. That will probably be the best setup if for some reason, you wake up tomorrow morning and this thing's already straight down, trading sideways down there, like we're seeing right now. Right? That's exactly what happened today. Market slammed lower. Well, it went up first, right? But slammed lower, went sideways, and see what happens? Everything goes up, right? They're literally selling into buyer failure, buyer failure, buyer failure, buyer failure, right? All they're doing is selling into it. Same idea if we go lower here again. If we run lower, watch out for that range down here. And your job is to simply let it go up, let the buyers wrap the rope around their neck, right, and literally sell right into those stop losses and keep doing it until they can get that 1, 2, 3 reversal. And then great, right? Find the new channel, and the process starts all up over again. All right, guys. Boy, what a great video tonight. I apologize. I know I'm probably, an hour late right now to the video. It's been a busy week. It's been a busy end of the year. And again, I promised myself I wouldn't get all sappy on you guys, but I'm going to do it anyways. It's been a great year with you guys and gals. I have had the privilege of watching so many of you folks just improve tremendously. The questions you're asking, the charts that you're sending. So from the bottom of my heart, thank you so much for making my effort not a waste of time. I see you working hard out there. I see you succeeding with these patterns. I see you building up your small accounts to join me in the trade room right next year. So your effort combined, right, with that dedication to being a trader really is what fuels me to keep putting these videos out Monday through Thursday. I know I missed last night, right? But usually Monday through Thursday, right? So keep up the good fight. I will not be doing the newsletter next week. This time of the year, you do have to get certain stuff out of the way, and next week's going to be that bookkeeping week, right, for me. But bottom line, though, is don't forget every morning, Monday through Friday, we trade this strategy together in our trade room, right? If you're on YouTube right now, I'll put all the links in the description of the YouTube. Get registered as a brand new member. Come out and do it with me in our trade room. You know, anybody can learn a strategy. The hard part is applying that trading strategy correctly. And because of that, we do it together every morning in our trade room, so all of our members can do it right there along with me, so you're not stressed out, right? So you're confident in executing the plan correctly the first time around. So get registered as a brand new advanced member. We get a bunch of great flexible payment options right now for the holiday season. And as always, if you have any questions, right, don't forget all the links are in the description of the YouTube video. If you're on the blog right now, it's a big blue button below me tonight on the video, or head to the website at School of Trade and get registered. In the meantime, if you have any questions, do not be afraid to call that toll-free phone number. Don't let my ugly mug spook you on that. Don't be afraid to use that live support tool on the right-hand side. And as always, if membership is not quite right for you, grab that free trading course as part of our free trial. I'd love to show you more about how we trade here at School of Trade. And on that note, I will say goodbye for 2019. I'll be back full steam ahead in 2020. I've got so much to share in 2020. But again, I'm not going too far. I will see all you guys and gals tomorrow morning and every morning, 8 o'clock Eastern time in our trade room, right, as a client. Get registered. I'll see you guys tomorrow morning, and we'll see what happens in the overnight session. As always, my name is Joseph. Be well out there. Be nice to each other. Be happy over the holiday season. Be safe. If you're traveling out there, a very Merry Christmas, a very Happy Hanukkah, a Merry whatever you celebrate. Have a wonderful time with family and friends. Make sure you keep in touch. I'm always out here working hard with my clients, and look forward to seeing you guys in 2020 on the next edition of this nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And we'll see you guys next time. Adios, amigos. Bye-bye for now.